Okay, so we've got a mixed start to the trading session. The TSX outperforming the U.S. markets in large part because of some solid performance so far this morning in the stock prices of Royal Bank and CIBC after their quarterly results. Coming into this home stretch of May, things started to look a little more wobbly for North American equities, but we're still up on the month overall. Let's bring in Diana Avigdor, portfolio manager and head of trading at Barometer Capital Management. Nice to see you.
Thank you for having me. Nice to see you.
How you feeling? What are you seeing on the charts these days?
I'm feeling a little wobbly for short term, but I do think the market is in an okay shape. If you look at the metrics that go into what you want markets to do, you have earnings, you have the macro, and you have money flows. That means whether people want to invest in the market or not, but there's always alternatives. Look at earnings season was fantastic. Companies are making money. And at the bottom line, notwithstanding the short-term gyrations, that is what you're investing in. Earnings. Earnings have consistently beat expectations. And now expectations are starting to be a little higher than they've been so far. So I'm saying it this way because I get the nuance. Is it going to be harder to beat? And then there's comps as well. But at the end of the day, when you take out the setup for the expectations, you still got to look at the absolute value of growth in earnings. And so that's going to come into play. And then we have a macro that's kind of supportive.
Now, it sounds like you're getting into some stuff that's a little bit psychological, because even though we're in what feels like a bull market, feels like some days we've been climbing a wall of worry. Are you saying when you sort of get more comfortable with the temperature of the water, you're like, okay, I'm going to stay around here, and those expectations start to climb for whatever you're talking about here, better profit performance or consistent profit performance?
Yeah. I mean, but we've been climbing a wall of worry for as long as we've come out from COVID. With rates going up as much as they have, did not everyone expect that we'd be in a huge recession right now? And we're not, and now we're pricing in higher for longer with one set of economic numbers coming in strong 1 week, and we keep being in this range-bound mentality of what we want. Are we okay with rates where they are, or do we need them to come down? And so right now what you're seeing is we've had in the U.S. some bond auctions that did not go very well this week. We have some rebalances out there on the indices, sucking some money around. An NVIDIA report last week, which was huge, is moving some money around. So we have a little bit of a treacherous little patch here, but we'll see with the data coming in tomorrow, which is important, where we're going to be then.
Yes, and also important for the Canadian landscape because we got a Bank of Canada decision next week, and I guess we get our last data point before that tomorrow as well. And there's been a lot of focus on the Canadian banks, how much money they're setting aside for potentially bad loans. The first three biggies that reported, it felt like the market said, oh, okay, well, they're gearing up for uncertainty. Maybe RBC and CIBC countering that narrative today. But banks are a pretty important component of the Canadian stock market, so what's been your assessment of what's happening?
Very big, very big. For us, it was thinking about which banks would get more hurt from the U.S. situation on the net interest margins. And what we've seen with Bank of Montreal yesterday was that they got hurt on their U.S. side a lot more due to their higher loan loss reserves. And with TD, they got into hot water with the AML also coming from the U.S. So for us, we wanted to focus a little bit more in the banks that are more closely held in here in Canada, and that was CIBC and National, and of all the banks that have reported so far, that has been the best, and Royal as well. We do own a little bit of BMO as well, but we will strategize that with our disciplined selling. Disciplined selling in the portfolio is the most important discipline that you can have. Buying and have stocks go up is great. It's an easy business. But knowing where to sell and take your losses is important.
Fair point. What's interesting about the Canadian banks, I don't want to get off topic, but since there had been so much focus on the U.S. markets in recent years, and yet here we are, national, performing well as a domestic business, RBC doubling down on Canada with the HSBC transaction, and to your point about CIBC, we'll see how that all plays out. Another big Canadian story is the energy sector, and I would assume the performance from here for the oil plays is going to be important. There are plenty actually of names in that group that you're continuing to monitor.
Yeah.
Do you like that sector?
Yeah. The thing that changed in the sector and that appeals to us a lot is their corporate discipline. These are now companies that that pay back to shareholders. They have buybacks. They have free cash flow yields. They do special dividends. So it's very, very shareholder friendly. Things like Imperial Oil on the energy side, CNQ we hold in our portfolios. On the nat gas side, we own Tourmaline. There are, of course, macro stories on the commodities themselves. We can talk about that we are in a reflationary world. We can talk about, supply and demand and economic growth supportive of commodities, copper, oil, gas, and so forth, geopolitics. But at the bottom line, these companies are very corporately, if that's the word, responsible right now. And that's shareholder friendly.
And while the analysts are mixed on all of those names, when you net out their average 12-month target price, looks like they all think that those stocks could be higher in 12 months from where they are right now. Final stock idea today, Costco.
Yeah.
Yeah.
They're reporting today after the close, so let's hope that works out for us. We own Costco. It's one of the best retailers out there. Really, it's a membership story. It's a retailer, and we all know we go there to buy stuff that's really, really good value. But it's a membership story. That's where their earnings come from, and the membership is poised to go up. There is another vertical that's growing there. It's their online presence. It's not the driver right now, but you don't know in the future that would drive bigger ticket items. This is a company that doesn't make its revenue on the margins on the goods that it sells, and so it can keep things in check. But it's a membership growth, and that's been growing.
Okay, great to see you, Diana. Thanks as always.